We're seeing things like the Dow Jones hold up a little bit better than cryptocurrency right now. And of course, they're not under the same pressure that cryptocurrency is under. We know that FTX was essentially committing fraud, mishandling user funds, and pinning up a lot of other legitimate digital assets to their FTX token, which was FTT, and essentially useless. The only real use case for FTT was to pay discounted fees for the fees on their platform for trading. So when all of this came out and everyone realized that FTX was a house of cards and not really built on anything but over leveraged nonsense, all these assets that were underlying started to get sold. So we see crypto under a unique set of circumstances right now. But let's take a look at the Dow Jones. Let's understand a little bit what's happening there. I'm still not essentially bullish on the Dow Jones right now. Now, if we go ahead and pull up our chart here for the Dow, we can see that the Dow is actually pushed up against some pretty crucial levels right now. We can see that if we look at our Fibonacci range from the high that came in over here in January of this year and the low that was set over here in October of this year, we can see that we got a bit of a double bottom that came in here, that we're up against the 618 Fibonacci right now. Now, this is an area where a lot of professional traders will look to short the market. It's one of the areas where price is either going to reverse from here and go significantly higher, or the downtrend is going to continue. And we know that the Federal Reserve in December is planning to hike 50 basis points as opposed to the 75 they've been hiking, but that's priced into the markets. The markets are expecting 50. They've been expecting 50 for quite some time now. And if the Fed continues to talk hawkishly to us, it is entirely possible that the markets continue to sell off based on that news. If the Fed tells us they're going to continue tightening, that they feel like even though inflation data is showing that it's battering a bit, we saw CPI and PPI come down, coming cooler than expected. That's positive, but we're still quite far away from the Fed's goal of a 2% inflation rate, right? So if we're looking at where we are technically, butted up against a very crucial Fibonacci level, looking at just a few weeks down the road, the Fed meeting coming up, it's entirely possible that these markets turn over on themselves and come and set a new low. So if we back out here and take a look a little bit back, I do think that we probably come back down towards some of these other levels, towards maybe the 200 week at least, maybe take a stop down here towards 30,000 points. But I do think that we come down towards this major support level down here around 26,000 points. There's a lot of liquidity down in here, especially if we see the markets just react very bearishly to some more hawkish statements from the Fed. I hope you enjoyed that clip. If you found it informative, you can check out more like it right here.